JC Parets, Eagle Bay Capital. We'll see what he's taking a look at the market here. S&P futures clinging to gains here. 216.50, up 8 points on the day, running into some little problems here. 2017.75, that's your pre-market high. The low on the session, right near yesterday's low, 2007.50, 2008.50, that's your current low. Getting a little bit of a rally here. We're going to bring JC on in 1 second. Meanwhile, we'll take a look at Mickey D's. Dennis, I'm just pulling it up now. Wow, 110. Printing 110 here.
Incredible move from Mickey
How
D's.
does you think?
JC, it's Joel and Dennis from Benzinga. How you doing on this Thursday morning?
I'm doing very well. How are you guys?
Good. Have you been eating a lot of Big Macs and Quarter Pounders?
Fortunately for my health, I have not. I absolutely have not.
So what do
But
you?
I do like the way McDonald's is setting up on a weekly time frame. That's for sure.
Oh my gosh, they blow away earnings here. They're trading up $6-7 here in the pre-market. I mean,
Million shares have
a
traded in the
million
pre-market.
shares of
I don't think I've ever seen McDonald's trade a million shares in the pre-market. I don't think I've ever seen it. That's incredible volume here. 110 now. JC, what do you do at this point in time? Obviously, this stock is making new all-time highs here. Is this one you just keep riding, buy pullbacks? What are your thoughts on Mickey D's?
Well, I wouldn't say keep riding it because it's not a stock that I've wanted to be in at all for a long time. It's been a stay away, and for good reason. You know, we've really gone nowhere. I mean, it's really just been a mess over the last year. It's not something that we wanted to be in at all. But we have been eyeing, this 100 and change level that has been resistance for the last 4 years. And I've been looking at this very, very closely for a long time, waiting for this breakout. And we just got a gap higher above all those all-time highs this morning. So I'm very fascinated by this. I wouldn't be chasing it here. We want to see how this is going to react. We want to see how McDonald's, if this gaps higher and fades all day, it's going to tell us that we need more time. If it gaps higher and we hold above all of those all-time highs from the past 4 years, I think that's your entry point. So we only want to be in this if we're above all of that overhead supply since 2011. And,
So like
I think we're going
105.
to learn
You
a
want to
lot
see
over
us?
the next 2 days.
So you want to see us above 103, 104, 105?
Yeah, I mean, the high in 2011 was 102. The high in 2013 was 103 and change. The high last year was 104, and here we are bumping up against this level for the fourth time over the last week or so, for the fourth time in 4 years, and now we gap higher. So the two arguments here. Is this going to be a gap and go? Is it a breakaway gap? And we just start racing higher? I think that would be the best case scenario. Realistically, however, that's probably not going to be the case. We probably fail, and a little bit more time is necessary. Although structurally, I would say that this is a fantastic development. I just wouldn't be the guy. I'm not going to be the guy that's going to be chasing this. I'm going to be the guy that is going to see if this actually holds, give it till the end of the week, and figure it out next week and try to set up a good risk reward. So I'm going to be patient with this, but I'd be lying if I told you I didn't love it.
Okay, loving it, McDonald's. JC, I was out last week. 2 weeks ago, we had John. The S&Ps were in the lower 1900s, I think 1920, 1930. And even though you kind of have a little bit of a longer-term bear stance, you were willing to dip your toe in the water on the long side. You saw some technical setups. The risk-reward ratios were there. We got the move. We got the pop. We rallied up. The S&Ps rallied up to that former support point, now posing as resistance. Are you just trying to move your stops up here and stay on the long side, or is it time, maybe ring the register?
Yeah, definitely not stay on the long side. I'm definitely taking the strength. I don't want to be in this at all. We got a nice rally. I wouldn't necessarily call it dipping your toe. There were a lot of things I like. Emerging markets, Latin America. Europe looked great at the time. Russell 2000 looked great. A lot of these things, looked fantastic. I mean, I think it was a much more macro story than just a little bit of a U.S. thing. I think it was a bigger thing than that. We got a great move, like you said. But, the move's been made, and I think you fade this, and I think you get the hell out of the way.
And so, what are you looking for? Are you looking for like a macro event to turn it? Are you leaning on the multiple technical highs in the S&Ps, looking into sell on weakness or sell at this area, use a stop up point? What are you using as a trigger? Let's say you've gone from long to flat, to go neutral to short. What will be your trigger?
Well, at this point, I'm super neutral
Okay.
in U.S. equities in particular. Very, very neutral. What's it going to take? Here's how I'm approaching the marketplace. If we can hang out up here for a while, in the overall averages, and we can hang up here and continue to absorb this overhead supply without going down and retesting those August lows and September lows or whatever it was. When we retested that at the end of September. So if we can not retest that for a third time, I think that would be extremely, extremely constructive. The problem is if we test those levels for a third time, then there's probably going to be a fourth or a fifth test and an ultimate resolution to the downside. The more times the level is tested, the higher the likelihood it breaks. So I'm looking to see if we retest that again. If we retest that again, I'm going to start getting really bearish again, and it would suggest that we'll ultimately resolve this to the downside. From what we said today, I think that's actually the higher probability outcome. But I like to keep an open mind and just wait and see what the market gives us. If we continue to consolidate up here and continue to absorb this overhead supply, I think that would be really constructive. I think that would be the most bullish scenario and would argue for a resumption of the uptrend that we've been in for the last 6 years. I think that's the lower probability outcome, but I'm keeping an open mind and see what the market gives us. So those are the two real scenarios that I'm watching for, and I think we can be patient in the meantime.
JC, let's move on to some individual stocks. Want to get your technical thoughts on how you approach something like this technically, or if you can even approach it technically. Weight Watchers announces Oprah's bought 10% of the company. She's going to probably be the new spokesman for Weight Watchers here. Stock goes from $7 to $20 in 3 trading sessions. Obviously pulls back significantly. Finally, some profit taking there yesterday. It pulls back $5. Can you trade these stocks technically, and do you trade something like this, or is this just too wild to even worry about trying to figure out, where this thing's going?
Well, I love the fact that it got crushed yesterday. I think that's probably normal. Yeah, of course you can trade it technically. You ran up to the former support from 2009 and from last year. So, you immediately rolled over from that levels, and you have a downward sloping 200-day moving average. So we probably had lower. Yeah, and I think you absolutely can trade it technically. I think you faded that strength from this week, and it rolled over really, really hard yesterday, as it should have. And it probably continues to roll over.
Here's my issue if I was trying to trade this technically, though, there's nothing really above you. So I just don't know where, like if I'm wanting to short the stock and saying it's just overdone. Well, you have a 5-point range from yesterday. So if I wanted to say hypothetically, I think the stock's going lower, I shorted at 15.55 here. Where's my out? I mean, really, this thing could go 16, 17, 18. It's still in that downtrend, but I'm down 20, 30% if this thing goes back to $19, but it's still in that overall downtrend you're talking about. So I'm just saying, if you're putting a trade on here at 15.55, isn't this kind of in the middle of nowhere?
Right. Well, you're talking about in a very, very, very short time frame. Take a step back for a second and look back and look what this thing has been doing over the last 6 years. We ran back up to that former support that broke down earlier this year. So when you say there's nothing above head, there's a ton of overhead supply.
I see it at 20, JC.
In terms of the risk reward that you're referencing,
yeah,
I couldn't agree more. I think
you're
100% right. So I think if you didn't short it yesterday, you short it here, it makes it a very, very difficult risk reward. I mean, you know me. I think you're 100% right. I couldn't agree more. So that's the problem. So just because the risk reward isn't in your favor doesn't mean you can't trade it technically. It's just not a good entry point right here this second. But there is 100% overhead supply from the last 6 years. I mean, that cannot be argued. And I definitely think we had lower. the risk reward today from where you put your stop, as you were saying, it's not in the best place.
Right.
So it's just not a great risk reward.
So if this thing got back up to like 18, 19, 20, that's where you might look for a short entry.
Actually, I think if we get back up there, I don't think it would be a great show. I think that would actually be really I think that would be a good thing. Actually, I would suggest that I would say that if we get downside follow through, which is
Okay.
the higher likelihood outcome here, it's probably going to head a lot lower. But it doesn't mean you're going to short it right here just because you think it's going lower. It's all about setting up risk rewards, and right here, right now, today, it's just not there. But if it rallies back up towards 18, 19, I'd say it's probably a really good thing for the stock. I just doubt that happens.
All right, JC, I know we're really challenging, and you're doing a great job with that Weight Watchers. How about VRX here? Citron comes out, sinks the stock, a lot of people underwater. Company tries to defend it. I mean, biotech stocks, fraud. I mean, a lot of different factors to look at here. Give us your take, if any, on VRX.
And I'm so happy you guys bring this up. I really, really am, because it's stocks like this that just bring so much joy to my life. To talk about, this is such a beautiful situation. You talk about, and getting back to the whole Hillary Clinton tweet thing about biotech, which you guys know I think is the dumbest thing I've ever heard. And this is pull up a chart of XVI and pull up a chart of BRX, and they are identical. Okay, you have a failed breakout in July and early August to new all-time highs in BRX. You had the same thing in biotech as a group. Then it broke down below the former resistance from late May, and then you had the rally back up to that level in the case of BRX, 244, 245, whatever it was, which was the former resistance in May and failed breakout in late July, August. You're not talking, when you hear about VRX, no one mentions Hillary Clinton. No one mentions any of that. But you had the rollover at the exact same time as you did in XBI as a group. And there has been no reason to be in this stock since it originally broke down in August and then retested it in late September when they all blamed Hillary Clinton. So if you're in this stock, you deserve to lose money. I love it, and it probably goes lower. I think it's great.
And you're not necessarily the perspective that you're giving here. You're not necessarily saying it's great, you love it because you've made a ton of money shorting it. It's just that you stayed out of it, and it's the kind of pattern. And sometimes the best way to survive in the market is not necessarily having good trades or good winning investments, but avoiding bad ones. Apple.
Exactly. I think you're absolutely right. And I think that's a great point. It's avoiding the disasters and the fact that supply and demand behaved so well and was so clear, and biotechnology has behaved beautifully throughout the summer. I mean, this is when you talk about keep it simple, stupid, supply and demand. And yes, we were short biotech as a group. I'm not one to be short biotechnology on an individual basis. I like shorting them as a group, and I've been very vocal about shorting them. So I would say, actually, yes, we were short them, just not this one on an individual basis, because that's just not, I like sleeping at night. I don't know about you.
JC, what about Walmart here? Everybody talking about it last week. It gets murdered there on disappointing guidance. They're saying basically they're not going to make or increase their sales until 2017. Stock has really been consolidating the last 4 sessions here. We are just tight. 50-cent range there yesterday between 58, 57, 59.03. Longer term perspective here in Walmart. What do you think?
Another one that I love and makes me so happy. People talk about, how they're laying people off, and there's every excuse in the book. You know where Walmart peaked at the beginning of the year? It peaked at exactly the 161.8% Fibonacci extension of the entire 2000 decline to the freaking penny, and has literally been crashing ever since, and there's been no reason to be in it. None whatsoever. And no, I was not short, but to your point earlier, it kept us away from it. There was no reason to be in this at all, especially when we got back below the former all-time high from late 2013. When we got back below it, then there was even less of a reason to be in this. So we're below a downward absorbing 200-day moving average. All upside targets have been met, and the market keeps going lower. So if you've been in this thing, you've been just bottom fishing, hoping for the best. There's been zero reason technically to be in this, bigger picture or short term. Now, all very, very short term, you said that we've been consolidating over the last few days, over the last week or so, and I couldn't agree more. I think you're absolutely right. Where are we headed from where we are exactly right now? Honestly, I think we probably get a rally. I wouldn't be surprised one bit. I think I think if you keep your risk management very, very strict here, I think you can get long. Me personally, when you look at a stock like this, it's literally been crashing. You have that gap down risk because so many people are getting crushed. You get the margin calls, and you get forced sellers, and bad things. VRX, for example, tend to happen when prices are crashing and they're below 200-day moving averages. That's when bad things happen. So the way I would manage risk on this is I would use premium instead of buying the stock. I would rather be long calls because if the calls go to zero, that's the most money I can lose. So if the stock gets down $10-15, which it very easily could, you're not going to lose more than you put in the premium. So if I'm going to be long, I would want to be long calls. And if we start taking out the highs from the last couple of days, which I think is very, very likely, I would start to get long, but I would use premium.
Okay.
That's how I would take advantage of this.
J.C. Parets of Eagle Bay Capital talking risk reward here on Benzinga's pre-market prep. J.C., it's great to be back with you. Great input for the entire interview. Thank you so much. We'll talk to you again next week.
You got it. Thanks again for having me, guys. Go get them.
Thanks, JC.